Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 9th of October, 2019. And yesterday, we produced a video entitled, China Trade Talks May Fail, but Gold and Silver are Up. We've put a link in the description below, in case you haven't had the opportunity of listening to that video podcast. But today's video is a continuation from yesterday's, as new important information has since come to light. So let's investigate. Subscribers to this channel are well aware that the three potential major impacts we have focused on, which could lead to the prospect of a looming recession and or a spurt in the price of precious metals, at least in the short term, are 1. The China trade conflict, 2. Monetary policy, and 3. Military action in the Middle East. The latter being a prospective black swan, which could short-term have the greatest effect if it were to come about. Now, surrounding these three are a host of other factors, which could, and even do, have an impact. But these three, in our view, are the most pressing right now, as they will or can affect the others. China is crucial, because as we have often stated in the past, it is the world's second largest economy, and since the 2008 economic crash, has to some extent been attributable to keeping the global economy out of recession. But its growth is now slowing down to such an extent that it is for the first time in decades envisaging growth below 6%. What is exacerbating the situation are the trade tariffs imposed on China by the Trump White House, whose goals, to be fair in this area, we actually support. Now, coming off the fence, we would have preferred the US government to have adopted the Scaramucci idea of imposing 2.5% tariffs, increasing by another 2.5% every 3 months, thereby enabling US importers sufficient time to make alternative provision, thereby limiting the damaging impact on US businesses. That said, we also accept that such a method would not have the same immediate impact, though the danger President Trump now faces is that the Chinese may indeed attempt to adopt its traditional long-term approach and do nothing to assuage the situation until President Trump is eventually replaced either in 2020 or 2024. But this is a tactical argument for another day. What we wish to focus on here are additional developments from yesterday's video in relation specifically to China. Now, yesterday we pointed out that additional Chinese firms have been placed on the US blacklist, meaning that for any US company to deal with those firms, they need permission from the US government first. Now, this is certainly ratcheting up the stakes in advance of this week's talks due tomorrow and Friday between China and the United States. So we thought it important to actually look at what is either being newly implemented or proposed outside the existing tariffs already imposed by both sides. Now, it was announced this morning that China is planning tighter visa restrictions for US nationals with ties to anti-China groups, such as those involved in the US intelligence services and human rights organizations. This is in clear retaliation to the introduction by the United States of tighter rules for visas for Chinese scholars last May, and yesterday's visa restrictions on Chinese government and Communist Party officials the United States believe responsible for the detention or abuse of Muslim minorities. Now, we all remember that back in May of this year, the US added Chinese tech giant Huawei technologies and 70 affiliates to its so-called entity list, or blacklist as we call it, banning the Chinese company from acquiring components and technology from US firms without US government approval. Well, it's also been announced this week that the US government has widened its trade blacklist to include some of China's top artificial intelligence startups, which also include 20 Chinese public security bureaus and 8 companies, including video surveillance firm Hikvision, a $42 billion company, as well as leaders in facial recognition technology SenseTime Group Limited and Megvii Technology Limited, the latter currently preparing an IPO to raise $500 million in Hong Kong. Though we have no doubt that some of our subscribers will be happy about this, as Goldman Sachs, Citigroup and JP Morgan Chase are joint sponsors of the Megvii initial public offering, and so could potentially lose a considerable amount of money if this does not go through. Now, of course, these companies are fighting back, and some with lawsuits. But there is no doubt this will impact US firms as well. Now, admittedly, the Trump administration is imposing some of these new restrictions based upon human rights violations, but it does not take much imagination to realize that it also helps solidify thinking and focus on this week's trade talks. However, these may now be in jeopardy, with Chinese news agencies suggesting that these talks may be cut short. In addition, and according to recent reports from Bloomberg, which appear reasonably sourced, the US is also moving ahead with discussions on possible restrictions on capital flows to China, with a focus on investments by US government pension funds. Now, the market's response to this news is, of course, not surprising. Yesterday, we saw the Dow close down some 313 points, the S&P 500 down 45 points, and the Nasdaq down 132 points, all down between 1.2 and 1.6%. The Nikkei 225 is also down over 0.6%, and the Hang Seng Index is down 0.8%. Now, the US dollar has weakened slightly this morning to just below 99, and gold and silver are up, with gold currently standing at $15.05 and silver moving ahead well at $17.87. Now, we stated yesterday that on balance we were pessimistic about the trade talks this week, and that pessimism is further fed by today's news. That said, something could theoretically be pulled out of the hat, though it is extremely difficult to see what. Now, if we were politically motivated, and on President Xi's side, in other words on the Chinese side, which we're not, we certainly would not do a deal in his position. President Trump is on the ropes politically, and with the impeachment inquiry heating up day by day, and some Republicans now coming out criticizing the president, and especially regarding the pulling out of troops from northern Syria, his star appears to be waning. Even a recent Fox News poll puts him 9 points behind Biden, the leading Democrat candidate for president. Now, President Xi, who is in a position for life, can afford to have economic turmoil, especially if it adversely affects the US economy. As one of the last bastions of defense Trump has for a successful election victory in 2020 is a strong economy. And if this does not materialize, then his prospects are seriously jeopardized. And President Xi will then hope for a more compliant Democrat president. What do you think? Do share your thoughts. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.